And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets, as always, with an eye toward helping you prepare not just for next week. We're looking out beyond that. And certainly it's been quite a week this week. Let's take a look at what we are going to be covering today. As usual, we are going to go ahead and take a look at where the markets are. Where did we close this week and what can we anticipate going forward? From there, we'll go ahead and take a look at some stocks. There certainly were a number of areas that did get hit, some of those higher growth names, and several or more than that are possibly reversing their downtrends. So we're going to take a look at those names, give you an idea of what to be on the prowl for, to give you confidence. Also, industrial stocks that you should know about. And this is an area that, of course, is part of that cyclical recovery area that is very much a rotation into that. I've been talking about that for weeks now, as far as value outpacing growth, and certainly industrials is part of that cyclical recovery area. And then also stocks that are hitting a new high, and there were actually a fair number. Given that the markets have been under a bit of undue pressure this week, that would be worth noting, because once those market pressures fully are released, if you will, those stocks will tend to continue on. As always, I want to share with you some of the more impactful news that hit this week. Early on, we did see manufacturing activity for February hit a 3-year high. So that's certainly very bullish as far as the economy and that recovery taking place. And then, of course, today we did see the payroll numbers for February absolutely surge. They were up quite high today. Also, oil prices throughout the week did firm up. And then yesterday's OPEC meeting, where the oil producing countries did agree to maintain existing production cuts, really helped keep oil prices quite high. Interest rates, big front and center headline news this week, of course, as it has been. We've been covering this in the past as well, but they do remain quite high. Interestingly, the broader markets today seemingly chose to focus on that payroll number and the fact that the economy is continuing to recover. Next week up, not a whole lot in the way of economic data, but we will see some consumer and producer price index numbers that will give us more inflation backdrop information. And then also consumer sentiment will come up next week. And of course, with the consumer being 2/3 of that GDP number as far as consumer purchasing. So that's going to be worth noting. But let's go ahead and look at where the markets are. Just where did we close with the S&P 500 as the focus? Of course, with my MEM Edge news report, I am going to be focused also very closely on the NASDAQ. But for today, what I did want to share with you is you can see quite clearly the S&P under pressure going into this week. And again, reverting back to my biweekly newsletter, I did not add any new stocks last Friday. I did put out alerts pretty much every day this week, just to really keep people or subscribers tuned in to what was taking place in the markets and what to be on the lookout for. So here we are, Friday, today's close. We did manage to close the week back up above that 50-day simple moving average. And from my work, and not just myself, certainly Wall Street in general, this 50-day moving average really is very closely paid attention to. So we can see this late January pullback. The markets did find support and were able to recover. But if we go back here, September was a correction. And then later on, late October into November, we did get a pullback. But that break below that 50 oftentimes will signal potential further deterioration. So to close above it is constructive. However, our outside momentum indicators, that would be your RSI and your stochastics, are still in negative territory. So we are not quite out of the woods yet. But let's drill down further. As always, we want to take a look at really what is going on behind the broader view. The S&P really was rather bumpy last week, but I think we know what the general trend was despite a 1% increase. Here we have those 11 sectors with the S&P. So I've gone ahead with this 2-month daily view, and then I add an RSI in descending order is how I want to view these because I want to see strength up on this upper left quartile relative to where the weakness is in the markets. And we can see front and center. Again, I've been covering this for actually months now. This move back into energy, soaring to new highs, another 4% increase. Last week, I believe it was up 7% and so on. So, really, leadership activity here among energy stocks, and all of that a lot has to do with oil prices as well as other dynamics that are really taking place. But this is a cyclical area, does tend to do well when the economy globally is recovering. So there is that one aspect, but certainly other underlying dynamics that are continuing to propel these energy stocks higher. From there, financials, another cyclical, another area that does well during a recovery phase. And we can see that financials, they actually had a good week, up 2%, but really in a bit of a consolidation phase. And this is what you want to see when these areas that are part of this economic recovery phase, they get overheated. Up here, RSI with XLF, this ETF, got up here into this overbought position. So at some point, at the very least, you would want some period of seeming consolidation. Back here, we did get a downright pullback, but again, these areas really sustainably cannot continue to new highs. So we are in good standing here with financials and, of course, those bank stocks. And then industrials up here in the forefront, up 2.5% for the week. That's an area that I'm going to share with you some interesting names. Certainly you'll want to have on your radar, but let's go ahead and drill down further to some of these underperforming areas. And certainly one would not have to look far or hard to know that technology really was one of the harder hit areas, but it actually managed to do okay for the week. Let's go ahead and pull up a weekly chart here, and you'll see that it was down about 1.3%, but we did recover from the near-term lows in the technology area. So certainly constructive. Keep an eye on this because technology has led the markets. Let's go pull up a longer term chart to give you a better grasp here. But this is a weekly chart, and certainly coming out of last year's bear market, it was all about technology. And a lot of the drivers that propelled these stocks higher as far as the need for these newer, certainly areas of technology remain in place. So we're going to keep an eye, certainly with my work at MEM Investment Research, for signs of a recovery here. But let's go back and take a look at some of these other sectors. Again, we did cover the areas up here in the forefront, but let's take a look at an area that actually was, they did, it was up for the week, but definitely was the worst performer. This is consumer discretionary XLY, and hopefully we'll have time. We'll get into that, but certainly Amazon dropping 3% would be one reason for that, and Tesla. So when you have these sectors, you'll want to be aware of those super heavyweight names that are an integral part so that you can attribute at least some of that either upside or downside that takes place. From here, let's go ahead and drill down a little bit further beyond those broader sectors. And this is where, again, a 2-month daily price chart, I go ahead and populate this with relevant areas such as interest rates. We're going to look at the 10-year yield. What exactly is the price of oil? We're going to use Brent crude, bank stocks, and so on. So from again here, that RSI descending order. And here we are, interest rates up here. As I mentioned, this was a real focal point, certainly has been, but this week again, with interest rates getting up to that 1.64%, really looks to me that we closed the week at 1.5, but I'm getting kind of differing reads on that. But at the end of the day, we are still up here at what I would consider rather high levels, certainly for an economy that is really only in the very beginning stages of a recovery. Here we are. This is another big story this week. We're looking at a daily price chart of that Brent crude up here at 67. There was a very, very critical OPEC meeting yesterday. This is the oil producing countries where they decide on their outputs. Are they going to put caps on it? Are they going to increase the output capacity? And they did decide to keep their output at their already constrained levels, very bullish. So moving right along, the KRE is the regional banking ETF, up almost 5%. But again, as we drill down, let's just take a quick peek here at volatility because it really has been volatile, the volatility index. But today we did see a fairly steep decline back into that 25 level. It is still elevated. Anything above that 1820 is considered elevated for this volatility, but we did see a fairly significant decline in that volatility. Of course, today's rally has people, of course, a sigh of relief, if you will. So moving right along, some of these other areas that got hit, semiconductors, of course, an area near and dear to my heart as far as being a leadership area. But they're really, this break this week really highlighted and underscored the, I would argue the area is not fragmented, but semiconductors is definitely a have and have not area. So those areas in semis that really had not been doing well fell further, and those that were holding up, such as from my MEM Edge report, really have done well and are in the throes of reversing their pullbacks. So as we move on, we can see biotechs. Now, this is a really risk on area of the markets. We have been pointing out the deterioration as there's been a significant move away from these riskier areas. Anytime there's uncertainty, in this case surrounding interest rates, it is going to impact these higher risk areas. And by that, I mean biotech stocks. A lot of them don't have earnings, so you're really buying them on a hope that they will get FDA clearance and so forth. So we can see that biotechs did get hit, down 5%, and they're going to have quite a bit to do in the way of recovery here. Software stocks, another area that had been really overall a high growth, high performing area, very, very definitely got hit. We can see down, this also was down 5%, all about interest rates, but there are some vibrant areas there as well in software. It's not all bad news, but certainly overall, quite a heavy pattern. So what we're going to do right now is I'm going to take a very quick break. When we get back, lots to cover as it relates to downtrend reversals, breakouts, and lots more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am going to go ahead and start this segment by taking a look at some of these names that have hit new highs. And of course, we just looked at the markets and some of those sub industry groupings, and always of interest to see those names that are really, in essence, bucking that pretty significant downtrend that we've been experiencing in select areas. So first up here is Lyft, LYFT. Of course, those of you that are out and about, mobility here in Los Angeles has not quite expanded yet, but Lyft, in line with Uber, are two, of course, car sharing, ride sharing services. But Lyft did report this week their best week as far as ridership since the pandemic started. So I think the excitement here is not just that Lyft is experiencing a nice uptrend here, broke out of this 2-week base on very big volume, but in addition, that concept that this recovery could very well be taking place as individuals do get a bit more mobile, certainly as the vaccine is rolled out. Let's take a look at another name that I have highlighted here in the past. I did highlight it back here as it was reversing this downtrend. Certainly wouldn't tell you that I had this in mind, but it is really a very explosive move for the stock. They did come out with earnings. Also, they have a new app as far as using third party. For those of you not familiar, they provide coupons that groups can then participate in. But interesting just to note what to be on the lookout for this that attracted me to the stock initially was this downtrend reversal. The stock breaks back above these simple moving averages on relatively high volume, and your outside momentum indicators also turned positive. Another stock that is in that space as far as providing coupons, Quotient Technology, QUOT, also earnings driven. Big gap up here. This is another phenom, if you will, that I talk about a lot, because when you see these gaps up on volume and they take place on strong earnings, oftentimes this is pretty classic where the stock will simply mark time until this 10-day, which was residing down here, in essence catches up with the stock, and then that uptrend will resume. And of course, the stock today is hitting a new high. Another vibrant area of the markets has been mobile home. Let's see if I can pull up a name that actually is hitting a new high, and not the most dynamic looking chart, but we are poised to break out of this space. This is Winnebago. The company is on track for 102% earnings growth this year. So that idea that you can be mobile and live on the road is seems to have quite a bit of traction. Here we are with the home builder, Hovnanian, HOV. This big move up, all about earnings. The stock is actually up 34% for the week, and that's not something you see too often. But there are several other home builders that are really sitting up here quite constructively. Again, all about earnings. Another vibrant area of the market has been advertising. OMC is Omnicom. They are in a confirmed uptrend. They provide a digital platform for companies to advertise, to purchase advertising. So we can see it's in this uptrend, pulls back to this 10-day and continues to advance further. So those are just a couple of the names that I wanted to highlight. Let's go ahead and move on to downtrend reversals. We talked about a number of areas getting hit today. One stock, this first up, is a stock that actually deteriorated prior to the broader markets. This is United Healthcare, UNH. It's not a stock that I would jump in with both feet for me, because I can see that over time it is generally a volatile stock. I do prefer to, if I'm looking for downtrend reversals, I would prefer to see a stock that was in a confirmed uptrend and fell in line with the markets. But this is, we can see, breaking back above today, above that 50-day simple moving average, 4% increase, nice volume characteristics, your RSI up here. And then also we can see this is your MACD, another momentum indicator, and it's just here poised to break up up here above that net neutral, which is bullish. We did have this earlier black line up through the red signal, which is indicating that this downtrend may very well be reversed. And of course, I like to combine that with the technicals on the chart. So that's one name certainly to keep in mind. Let's move on to some to networking stocks within uh, technology. And this is Cisco CSCO pulled back. This is in line with a number of recently high performing tech names that fell out of bed. So we can see that the stock in attempting to reverse this downtrend, we did close below this 21-day simple moving average. I will want to see the stock break above all of these moving averages. And then we do have that RSI poking into positive territory. We're not quite there yet with that MACD, the moving average. Convergence, divergence, this black line up through the red, and a nice further advance on the stock above its moving averages would be more compelling. We can take a look at a smaller cap stock. Cisco, of course, is part of that networking group. This is ALLT and trying to reverse that downtrend. The stock certainly will have more work to do because overall, your general momentum is still down. This is what you're going to want to keep your eye on when you are examining stocks that had hit new highs and pulled back. When on the prowl for these downtrend reversals, you will want to see a very decided uptrend as far as on those outside momentum indicators, similar to back here where you have that crossover. So we're not quite there yet. Let's take a look at other names. I did talk to you about housing stocks. This is Lennar, LEN. And again, it had hit a new high back here, fell back well below this 50-day simple moving average. But then today we're getting a nice 7% rally. So very, very early in that potential turnaround. We're not quite getting that reversal here, but oftentimes you can go back and look at historical precedent for to enable you or give you more confidence to embrace a potential downtrend reversal. And taking us back to the end of December, we can see going into the beginning of this year, once the stock broke back above these moving averages, you got these outside MACD up above zero, nice crossover in line with your positive RSI. That was, in fact, the beginning of this move from 77 up to about 97. So keep that in mind when you are looking, perhaps spending the weekend going through thousands of charts, which I know I will be and have already been venturing into. But here we are with another stock, PENN, Penn National. So you can see what's capturing my eye here, and that is this move back above this 50-day simple moving average. So that's going to put the stock on my radar. There is still work to do on the outside as far as indicators, but certainly this is the critical time to go ahead and get your watch list together. Crocs, this had been a big leader. For those of you not familiar, they're those plastic kind of alligator shoes, but they've really taken off in popularity. Again, it has broken back above that 50, but still has other work to do to resume its uptrend. Another area, so from my work, of course, I'm always screening the markets, very, very tuned in and on top. So some of you may remember LOVE. It's the Lovesac company, similar to Crocs. It has been a real winner, pretty much confirmed uptrend. And again, that break back above that 50 has it on my radar, but still we do need and have work ahead of us. Let's take a look at another advertising related stock, certainly as it relates to digital and digital media. This is Tech Target, TTGT. So when you see these stocks, such as Tech Target, that really exploded here, it went from 60 to 100 in a matter of 6 weeks or less. So pretty explosive move, super overbought up here. So it is with anticipation that at some time you will get a pullback. And of course, that's exactly what we did get. I would argue so. We did give back quite a bit here, but these dynamics that led the stock to a new high are still very firmly in place. The company's numbers are still quite constructive. Uh, Again, too early here, put it on your radar, but this decline here, for those of you, of course, that may have owned it, I'm not going to dismiss the pain that you may have felt, but I will tell you this stock is very clearly potentially setting up when we get the attractive dynamics as far as this crossover, positive RSI, and so forth. So definitely put this on your radar. Not quite ripe yet, but it has a lot of the characteristics that make it rather interesting. So here we are with another stock. This is Avid Technology, AVID. So I think you can see a theme here where I am focused on those companies that had these nice, very upward trending moves, all about earnings. And we can see that the stock did pull back here, and but it has broken back above this 50. So we're going to go ahead and keep this on our radar. Let's move on. I did want to share with you, I talked about industrials and then also stocks breaking out. So I'm going to start with the industrials, and we can then move on to that other area. What I am sharing with you here are names that are compelling, and they are going to capture breakouts as well. This is MCOR, EME. We can see this nice base breakout, and then this is that reversal that you want to be on the lookout for other candidates that have sold off. Here we are with another industrial name. This is in the chemical and paint area that has been quite vibrant. This is Celanese CE. And in addition to being the fastest grower among its peers, it's also still relatively cheap on a multiple. For those of you who pay attention to that, 31% earnings growth for this year, and then 9% for next year, but really quite dynamic. Another area we can look at in industrials is construction, mining. This stock is involved in a lot of very vibrant areas. It's MDU Resources. Now, I didn't realize that it had gotten this advanced. It certainly is extended. So you are going to want to look for a pullback, but again, all about earnings and estimates being revised higher. Next up is Ingersoll Rand. This is a stock that had been on the MEM Edge report back here. We were able to take advantage. And so we can see here more recently that the stock is breaking out of a nice 2-week base, nice volume characteristics. This is a pretty big move, 5%. So I would look for some sort of a pullback, but definitely keep this particular stock on your radar. One last name we can take a look at is Johnson Controls, JCI, another stock in a confirmed uptrend. This is an Irish-based company, and they provide security systems, fire protection for schools and hospitals and so forth. And they've seen really nice, as far as their growth profile, continuing to expand. So doing really quite well. I'll share with you, I think I have time for maybe one, perhaps two of these breakout stocks that caught my eye. This is HCA Healthcare, a hospital stock. We can see this nice base breakout on heavy volume, RSI, MACD in positive territory. For those of you that haven't already, go ahead and use that link down below for a 4-week trial of my MEM Edge report. Over the last 2 weeks, I provided alert reports every day of the week, lots that we needed to stay on top of. But I'm going to be all about alerting subscribers to when it is safe to get back in, not only to the markets, but back into those growth stocks, as well as taking advantage of the move into these recovery stocks. Have a great weekend, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.